Hello, I'm Bernard Hickey from interest.co.nz and welcome to an economic weather report brought to you in association with BNZ. Today I want to look ahead, at least a day or so, to a meeting of the US Federal Reserve in the United States. This is the guy we should all be thinking about right now. His name's Ben Bernanke. He's the chairman of the US Federal Reserve, and a decision he's about to take, or at least in concert with a group of people on the US Federal Reserve's Open Market Committee, could set the direction for the global economy and for New Zealand for years to come. Many people in the financial markets believe that Ben Bernanke, here, is about to fire up his helicopter here and dump a lot of freshly printed money out into the US economy. The US economy is just not getting going as fast as everyone expected. In fact, it faces deflation, according to some people in America. There's so little activity there, particularly in the banking system with lending, that the idea is that the US Federal Reserve can juice things up by printing some more money and getting it out there into the economy. Ben Bernanke himself described in a 2002 speech how he could tip money out the door of a helicopter and it would flutter down into the economy and get things going again to avoid deflation. That's why people talk a lot about Ben Bernanke, or Helicopter Ben, as he's often described. Tomorrow, financial markets expect that he will come up with a new version of money printing, a second round of quantitative easing. It's not clear yet exactly what form that might take, and it's not clear whether it will be effective, for a couple of reasons. Firstly, the real problem is that the banking system in America is essentially broken. It's not distributing that money from the central bank out into the economy in the form of loans. That's because many of the people who might want to borrow don't, because they're already up to the gills in debt. Or they're not creditworthy enough. The banks have looked at them and decided it's just not worth lending them money. Also, some of these banks, particularly the smaller ones, are under severe stress themselves and are not in a position to start risking some of their own capital. They're essentially in their holes, trying to recover after the crash of 2008. The rest, the big 5 or 6, which are government guaranteed and which were effectively bailed out by the US government a couple of years ago, they're busy in the financial markets making their money that way. So even if the US Federal Reserve does print more money, it may be difficult to get it out into the US economy. So there's other ways in which it can pump money into the world's biggest economy. It can buy US Treasury bonds or US mortgage bonds. What that would do would be push down interest rates to a low level and encourage people to go out and borrow, to invest in businesses and create new jobs. The trouble is, US interest rates are already extremely low. In fact, for 2-year Treasury bonds, they're below 0.5%. Can you believe that, for 2-year money? And for 10-year bonds, it's under 3%. So it's hard to see how the Federal Reserve could push interest rates much lower and get people borrowing again. There is another way to do it. That's to essentially monetize US government spending. Now, at the moment, the US government's borrowing upwards of 10% of GDP to spend on deficit spending. And it's doing that by issuing Treasury bonds. Some of those it's selling to investors internationally and locally. If the US Federal Reserve decides to print money, it could use that printed money to buy US Treasuries, US government bonds. That would keep interest rates low and help the government monetize that deficit. The problem here, of course, is that it's seen by the rest of the world as printing money. And people start asking questions about whether the US government can continue to service that debt, even though it's growing fast, and whether or not you can trust the US dollar to be the reserve currency as it has been for close to 100 years or so. These are big questions for the global economy, for the international financial system, and for New Zealand. Because if the US dollar was hammered by a new crisis of confidence, that would push up the New Zealand dollar. If you have central banks around the world printing money to try and drive their currencies down, and New Zealand are not doing it, that raises the question, what's going to happen to our own export recovery? These are big questions that everyone, frankly, should think about. Could we be entering a new age of deflation, a bit like the Japanese saw in the 1990s and 2000s? That's certainly what the US Federal Reserve is worried about. Or are we about to enter a new age of hyperinflation, where extreme printing of new money, a bit like Zimbabwe, causes an inflationary surge, We've certainly seen wheat prices jump up and some other commodity prices jump up in recent weeks. It's a really tough one. Hyperinflation versus deflation. We're not really quite sure, and tomorrow's decision from the US Federal Reserve will go a long way to answering that question. Certainly one to watch. I'll be excited getting up in the morning. I'm Bernard Hickey for interest.co.nz. That was a special economic weather report brought to you in association with the BNZ.